What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends, freedom, anywhere is the goal. And today we're back with another portfolio update, as well as a market update with some news and stuff like usual. So let's dive right in. First things first, we have 897 subscribers on the channel, so we're looking good. We've got 29 videos. I'm currently filming the 30th video, which is also the 28th portfolio update. If you are new here, it would mean so much to me if you could smash that subscribe button. It helps keep me motivated to continue making these videos. And most importantly, if you are watching, if you can smash that like button, that would help so much with the algorithm thing. As usual, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, I wanted to dive into my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. This is the whole reason that I do these portfolio updates and have this channel. But basically, I have two sources of income currently. One is remote work income, and the other is business income. And yeah, the remote work income, pretty stable, pretty consistent. The business income, it fluctuates up and down depending on the season. But basically, I have committed to contributing a minimum of $300 all the way up to $1,000 plus per month, which I'll be depositing into my Robinhood taxable brokerage. And I'm treating this brokerage like a business, aiming for 30% plus high yield annually. And the way that I'm achieving this is through investing into high yield income ETFs, such as, but not limited to, WPay, HOW, QDTE, XDTE, XPay, BLOX, and etc. And I have set a max of 5 positions for my portfolio, and I will be alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy, investing approach. You guys can do your own research at a later time. It's not something I came up with. I actually learned it from a guy by the name of Eugen Vasquez here on YouTube, but it's been around for quite some time. And yeah, I'm basically going to be reinvesting the weekly or monthly dividends, depending on what I'm investing to at that time. And I'm either going to be doing drip or stacking the dividends to purchase when the market is down. Drip plus always compounding is the portfolio growth strategy. So basically, I'm going to be rinse and repeating this until the account hits $1,000 per month in dividend income. Now, again, none of this is financial advice. This is for entertainment purposes only. Next thing I wanted to dive into is my dividend income milestone. So for those of you who don't know, this is while I grow my small portfolio. And basically, it's so I can celebrate the small wins leading up to the bigger goal along the way. So we've already accomplished the first and second goal in this journey. And currently, I am on track to reach $300 a month on the third goal and potentially $400 a month, as long as dividends and distributions continue to pay out around the same amounts. Last but definitely not least, this is a new strategy or defensive strategy. Basically, I'm looking to diversify a bit and hold some different positions that are more focused on growth, and I'm breaking it down accordingly. They are in different categories of allocations. So the first 50% of my allocations will be in high conviction, high yield ETFs, or HCHY ETFs, as I like to call it. And these are positions that I believe aren't going anywhere, and they will allow me to continue increasing my share sizes for each position. But most likely, these will be a little bit more high risk during a bear market or during a severe pullback. And then the remaining 50% will be divided up amongst 3 types of funds. The first 20% is growth ETFs. The second 20% is stable NAV index ETFs. And the last 10% is into bonds. And the reason I've chosen bonds is because this allows me to still use margin without cash funds being used up first. And because it's sitting in SGov, which is my bond of choice, this also gives me flexibility with paying off margin should my margin buffer ever reach a high risk percentage. So I am trying to, in the near future, contribute towards this other allocations. But in full transparency right now, 100% of my allocations have been into these funds. Now, hopping into the Robinhood portfolio, we are currently sitting at $5,696.10. We are looking okay. I'm monitoring things. Yesterday, we were only up 25%, which in my mind is kind of a win. But as you can see in the pre-market so far, we are down 0.85%. We shall see if this continues to play out as well. I will turn this on just so you guys can see this. I just wanted to pull this data, that's why. But I click show all hours, we are down 1.44% actually today. I am anticipating another, oh, it just updated 1.14%. So I am anticipating another red day. I know yesterday was slightly green, but it's still red in my mind, but we shall see. Our buying power is $2,860.59. I'll dive into why that is shortly, but we have a 51.99% margin buffer, and which also equals $2,943.46. My margin total is $6,188.04. My margin used has decreased and now it's down to $3,327.45. And yeah, basically the reason why my total has increased is because I sold off all my blocks yesterday for such a small loss, but it's a loss nonetheless. The reason why I ended up doing that, guys, is simply because after the pullbacks that have happened and remembering and reminding myself of what type of positions, what type of investments, what type of categories I want to invest in, and reevaluating my overall strategy, I came to the conclusion that BLOX is not right for my portfolio at this time. I'm not really looking to get crypto exposure. When I first was interested in BLOX, it had nothing to do with the crypto aspect. It had more to do with the NAV and how it's been going during the course of its inception. But that is not a good enough case because it's a very volatile ETF to invest in. I'm not saying it's bad. I still like the position a lot. Also, it's close to its 52-week high. And because we're entering the end of the year almost pretty much, most people are going to be selling off or realizing their gains or doing tax harvesting and all these different things. So I want to be mindful of that and prepare in case these positions take quite a bit of a beating. But yeah, we're looking good overall, but I just wanted to share that with you. Now, diving into my positions. For WPay, we are currently sitting at $52.07 a share. So it is up 1.38%. And our market value is $5,210.09. So as you can see, we did increase that. And we are down $71.31 or 1.35%. Our average cost per share is $52.78. And as you can see, I bought more shares of this because it was significantly down and I just saw it on the cheap and I was like, yes, 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 I got to buy more of this. This is one of my core holdings. So whenever it dips below my average cost, as much as possible, I would love to reinvest into it with reason. But yeah, that's what I did with the amount of money that I ended up getting from selling my blocks, sitting at a portfolio diversity of 57.74% and a maintenance ratio of 30%. But again, full transparency, we did get 20 shares purchased at $51.75. Next, we have HOOW. It's currently down 2.68% pre-market, although Hood did beat earnings twice. So it's a double beat. I'll cover that a little bit later. I've got some articles and stuff or some posts I want to share with you, but yeah, incredible. So it's currently sitting at $70.48 a share. Our market value is $2,185.28. We are up $69.89 and up 3.30%. Our average cost per share is $68.23. We are at 31 shares with a portfolio diversity of 24.22% and a maintenance ratio of 30% as well. So if this at all today dips below my average cost, best believe I will be purchasing some more, but I'm not really sure of how things are going to play out. I mean, they did get a double earnings beat, but it is down. It's down 5.59% in the past week. Nothing too crazy. I definitely think the earnings news after hours played a big factor. I mean, look, right at 4, it just dived straight down. I think people were preparing for the worst. And then at 5, it kind of started trickling back up. I don't know. I'm hoping this continues to recover and we continue to see my total return increase, but we shall see. Last but definitely not least, we have NVDW. It's currently sitting at 48.78%. It's up 1.06% pre-market. Our market value is $1,512.18. Our total return is $103.89 or 7.38%. Our average cost is $45.43 a share. We are at 31 shares and a portfolio diversity of 16.76%. And also this one has a 30% maintenance ratio. Now, hopping into the investing journal, I did want to quickly cover this. For those of you who don't know, I've been logging into this investing journal since I started this portfolio. And just for some receipts, this is my first entry. It was back in August 19th of 2025, and my portfolio started at $678.67. Now, the positions at the time that I had were ULTI, XDTE, and YBTC, but we've come a long way from that. So now diving into today, you guys already saw the net account value on Robinhood, but with the margin positions included, it comes around to $9,023.55. I've only contributed $899 so far this month, and my positions of HOW, WPay, and BDW, we've already covered this. For those of you who are new and haven't been watching any of the channel yet, we are currently sitting at $94.68 for the entire month of November. So that's what we gotten paid this week. And we don't have any more positions that we should be receiving a dividend for. So that's it. And we're going to wait till next week to see what we get paid. Next, we are hopping over into the dividend sheet. If we come over here to the market return and total return, I do have to disclose this. This does not update according to the pre-market. It just pulls the last data from the market close, I believe, at 4. Our total return here is 13.04% for HOW, 2.37% for WPay, and 9.18% for NVDW. So for those who aren't aware, the total return includes the dividends that I received from these positions. Now, hopping over into the market return, it's at 5.82% for HOW, negative 1.04% for WPay, and 6.13% for NVDW. And quickly hopping into the dividend log, this is just for everyone's sake so they can see how much I've received so far since I started this portfolio. I've received $153.34 from HOW. I received $180.15 from WPay, and $42.91 from NVDW. Back in August, I earned a total of $5.20 in dividends. In September, and these are all my sold positions, by the way. In September, I received $24.12 and $5.27 from sold positions. Now, for the total of the year, we have $410.99. Last, I wanted to cover the sold positions. Like I mentioned yesterday, I did sell blocks. So here is the entry. I like to log it so that way it's fully transparent and understood. I had an average cost per share at $25.17. I had 50 shares and the sale price was $24.44. So I did take a loss here. And if we jump over to the side, you can see I sold it for a loss of $36.50 or a market and total return of negative 2.90%. Now, I really quickly wanted to dive into X. So if you aren't already, make sure to follow me on X. I post all my updates and stuff, and I have a goal of reaching 100 followers on here. But yeah, this is my X account, so you can follow it. It's at I'm Nomad Investor. Again, that's at I'm Nomad Investor. Now, moving into the post. Like I mentioned, Hood had a double earnings beat. So it had an EPS of 0.61 versus 0.54 expected. So it exceeded the EPS. And for revenue, it was expected a 1.21 billion revenue, but it ended up doing a 1.27 billion. And the stock was down 5% after hours as of this post. And then if we take a look here, the sentiment overall for Hood is bullish. And I think that is going to hopefully trickle into today's market open. I'm hoping and praying Robinhood will continue to pump. Robinhood's revenue has jumped from 300 million in 2022 to 1.27 billion in 2025. That's pretty incredible growth. Now we have a post on X by Beat the Bots. So sticking with our Robinhood theme, he is doing HOOY from YieldMax versus HOOW from RoundHill. Total return since June 18, 2024, which is HOOW's inception. HOW is up 86.42%. Hood, the regular Robinhood stock, is up 82.52%. And HOOY is up 56.69%. For the latest yields, HOOY is at 101.69%. For HOOW, it's 95.76%. So far, the winner here for total return is HOW, and the winner here for highest yield is HOOY. And then the strategy is HOOY, synthetic covered call, capped upside, weekly income, cushions, drawdowns. And then HOW is 1.2x leveraged hood exposure, no upside cap, weekly payouts, wins in strong uptrends. For market playbook, it says big rally, HOW, low volume sideways, HOY, high volume chop, HOW, sharp dump, HOY. Bottom line, max yield and downside cushion, HOY. Income plus real upside participation, HOW. And then he has this chart here where you can see that clearly HOW is, in the lead here by about 30%, I believe, roughly around there. So I thought this next post is just super interesting and I wanted to share with you guys, but this is a X post by trades_Hayes or Stark Capital. It says, as I said, I'll be tracking the ultra portfolios on here. Solid day for the trio. ULTI by Rex Shares is winning at 6.12%. KYLD by Curve Invest is second place with 2.54%. And ULTI with a Y from YieldMax ETFs is third with 1.05%. Yeah, this is really cool to see. Obviously, ULTI, I have no faith in this position, but ULTI with an I from Rex Shares and KYLD, these are two pretty interesting positions when it comes to competing in this high income space. Which of these three do you guys like the most? Comment down below. Next, we have a post from Richie B, aka Wanna Be Fresh. He said, timing Trump's tweets is greater than time in the market. True story. And then he is highlighting or quoting this original post. So let's take a look at that. In the original post, it says, Trump, stock market will reach more record highs. President Donald Trump said Wednesday he expects the stock market to hit more record highs, noting it has already set many over the past 9 months. Speaking at a breakfast with Republican senators, he said the U.S. has the hottest economy ever, though the government shutdown is affecting the market a little. Trump added the rally will resume as new U.S. factories start opening up. I wasn't aware that there were going to be new U.S. factories opening up, but yeah, I mean, we shall see. These are some interesting words from POTUS. Last but definitely not least, I wanted to share this with you guys. This is my Dividend Nomad calculator. That's at least what I've called it for now, but I've been working on this for quite some time and it's almost complete. I just wanted to simplify the current dividend sheet that I've been using. Yeah, let me know. What do you guys think I should also be tracking on here? So far, I obviously have margin calculator, contribution calculator, the holdings where it has like average cost per share, share price, allocation, market return, market return percentage, total dividends, cost basis, market value. I do have the allocations here. And then I also do have let me slightly move myself. I do have a dividend log as well. This is version 1 of the dividend log. It's very similar to what I've been previously using, but I'm actually working on a V2, which I'll just kind of show you guys sneak peek. We shall see how it goes. And then there's also this is probably my favorite. This is a more in-depth contribution calculator where you can pull your portfolio data. You can enter the amount that you're going to contribute here, and then that'll populate here. And then there's new portfolio value, the target allocation that you want. You can break down your positions and you can put your target allocations for this. So that way, next time you contribute a certain amount of money towards your account, you can be like, okay, cool, I need to contribute more towards HOW because it's down 4.96% of my current allocation. Now, again, this is just like stuff that I've been playing around with and it's not complete at all, but I'm very curious. What do you guys think I should also add into this dividend sheet that I'm working on? Comment down below, share your feedback, share your thoughts. I really appreciate it. And who knows, maybe, just maybe, I'll release this to the public. We shall see. There's one last thing that I wanted to share with you. And this is a tool called YieldMight.com. This is actually pretty neat. So I recently entered in my portfolio and I was curious how much dividends I would get paid out for the month, for the week, and for the year based on the most recent distribution per share. Just going based off of the $1.26 a share that we got paid from HOW, the 48 cents a share from NVDW, and the 56 cents a share from WPay, you can see that that would equal roughly a $111.14 weekly dividend, $481.59 monthly dividend, and then a $5,779.03 dividend payout for the year. If we are able to maintain these distributions, we would already be hitting well over that $400 a month goal that we have set up for this month. So let's just hope and pray that the markets are favorable to us as well as the distributions. Anyways, guys, I hope you enjoyed this portfolio update. If you have any comments, questions, feedback, or suggestions, make sure to comment them down below. And most importantly, if you are new here and you haven't already, smash that subscribe button. And for everyone else, make sure to smash that like button. It really does help with the algorithm and go a long way. With that all being said, until next time, guys, peace.